Good morning. It's October the 27th, 2017. Time to kick off another day of trading. It is option expiration day for the treasuries. It's also a post-auction week settlement day, so that tends to freeze the treasury market and hold it in a trading range. And we have news today that can move the markets with the GDP numbers coming in. So we ought to have ourselves some pretty good volatility to work with in the financials and hopefully the indexes. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, mathematically today, the option expiration favors a close between 8 and 16. We do have a P right here. I think we can trade higher. They usually, the first move of the day is up or down. And if it's down, they'll freeze the puts, the 124 puts. Then they'll take it away from them. If the first move is up, they'll freeze the 24, 16, and 125 even calls. Then take it away from them. And then close mathematically where they make the most money. And a mathematical close at 124.16 is where they make the most money today. So we'll see if that actually happens. So I think we're going to have pretty good buying below 8. And we have stops below the overnight session and stops below that. So we'll make our first buy 4 to 8. And the second one 29 to 01. Now, the E-mini makes new highs off today's GDP information. That can definitely affect us. You're going to play for a little bit higher, freezing the calls in place, so we'll make sell 1 15 to 19, followed by 23 to 27. Okay, the big news today, GDP, plus 2.5. Now, the summer could come in higher than forecast, and if it does come in higher than forecast, the equity players will talk about the economy is growing, it's expanding. Even with the impact of Hurricanes Harvey and Irma, things look pretty good. Buy stocks because earnings per share are going up. If it comes in less than a 2.5, I'll say, well, you know, Harvey and Irma impacted the data right here. The rebuild has begun. We're going to get the benefit of that rebuilding in those two areas in our fourth quarter numbers by stock. So I think GDP today, if it comes in less than forecast, won't hurt stock indexes all that much, but it'll hold them in a trading range, which will reinforce our trading range idea for treasuries. The deflator plus 1.6. Fed wants inflation over 2%. The real spending plus 2.3%. Ultimately, that drives the economy. They'd like that closer to 3%. Consumer sentiment, 101. And Baker Hughes rig count. It could come in lower than forecast, as we said. We've been saying for the last 3 weeks. And it takes a long time to line up drilling contractors and the rest of it. And it takes a you see the impact of increased drilling 3 to 5 months after the decision is made. You'll see the decrease in drilling activity 3 to 5 months after the decision is made. And $50 crude is what the market is keying off of. Over 50, the drilling activity picks up. Less than 50 can slow down a little bit. They always have to drill to replace the reserves that they are using up. But they don't have to drill to expand the reserves. They can just drill to replace. And that usually is safer type of drilling, infill drilling, etc., as opposed to wildcatting or deep Gulf exploration. Okay, looking at the 30-year. Yeah, the Amazon and Google, the FANGs, are back in play. The Apple needs to get its act together and get the iPhone sales with the introduction of the 10, which I believe is on the 3rd of November. So you add Apple to that group, then you have Netflix. Things could look pretty good for the stock market. Right now, the stock market is poised to make new highs, Scott. No doubt about it. And I don't think it's over until Trump's package is known, and that's why we're in the 2,600 calls right now. Okay, looking at the bond, 28 to the buck is number 1, 3 to 7 sell 1, 11 to 15 sell 2. The mathematical expiration for 30-year is 151. That's where the option play was. We'll see if we get it. Okay, 16 to 20 is number 1. Buy 9s to 13s. Buy 1, just leaning against support. Buy 1 to 5. Now, if the E-mini is blowing through and making new contract highs and the rest of it, it'll favor the low end of the range. If the E-mini doesn't make new highs, and I think it must takes a higher than forecast GDP for that to happen, then trading range will probably hold. My best guess. Okay, gold. We were buyers at 65 to 67. That's where we are right now. We got this low volume number at 64. So we'll make, I think we're trading lower, but we may not break it this morning. Buy 1, 64 to 66. Buy 2, 61. Pick up that low volume number to 59. On the sell side, 69, 71. 73, 75. So I think 75 is pretty stout resistance in gold. If we stay below 75, we should get stops below 50. Takes a while to get there, but get there we should get. Now, the one day a week that we know that we're going to trade gold over crude or Wednesdays, that's inventory day. Yesterday, gold was our big producer. Because the tapes are written on crude oil, we emphasize the crude market, and I've got lots of experience trading crude, so works out for everybody. 1650, sell 1. So this 45 to 55 area right up in here, sell 1. 1675, sell 2. Why is the euro selling so much? Because they've pushed interest rate increases past September of 2018. 116.25, buy 1. 116 even, buy 2. Get paid more money on your money investing outside of the EU. Sell euros, go put your money someplace else. Okay, a Saudi prince or official yesterday said that he was in favor of extending the production cuts into 2018, and we really kind of know that that's coming, because when OPEC can't get a deal, they extend the current one. We had a 75 to 53 sell yesterday. We'll keep it. 53 and a quarter, 53.50 sell 2. A structural sell right here would be at 52.60 on 3-tick increments. On the buy side, we've got all this volume down here at 24, so a structural buy would be 52, 27, 28, leaning against these numbers right here. And you can see how crude's been getting pretty quiet at night, not a lot going on. So we'll make the first buy. Let's make it 52, 52 and a quarter. We'll play for the volume here, and volume right there. And then buy 2 will be 51.50, 51.75. And we'll put a question mark here at this 52.50. Just have to see how she goes. But we wanted to sell 75s last night. That worked out fine so far. Fundamentals still remain sketchy for crude oil. There is more production than demand. They are counting on worldwide economic growth to take up the slack this year. Okay, looking at the E-mini, a lot of the chatter last night was Bezos just added $6.2 billion to his net worth. It's a lot of loot. And it would have to give you a sense of power and entitlement when you see what goes on in Washington, D.C. Okay, current resistance is basically 25.70. So 69 to 71, sell 1, that's resistance. 74, 77, sell 2. The GDP number, plus 2.5. Comes in lower than that, the hurricanes will be blamed. Comes in higher than that, the economy is really strong in absorbing even the damage that the hurricanes have done. Buy stocks, earning per shares are going up. Deflator plus 1.6, real consumer spending as opposed to unreal consumer spending, 2.3%. They're 70% of the economy. I'd like to see that number closer to 3. Consumer sentiment 101. And Baker Hughes rig count, don't know. Previously, these numbers could come in lower than forecast, as they have the last 3. The focus is GDP, followed by consumer sentiment. On the buy side, pretty aggressive, 64, 66. We can adjust that after the news. And then 60 to 62. So we're trying to buy 60s to 65s. And we can sell failure, take out and hold 25.70 to 75. Now I go and see where resistance has been on chart highs and chart lows, pivot points. I don't use mathematical projections. Try to get 3 to 5 data points off of the charts. And the last rotate up was right over here. Actually, it was about 69 and a quarter, something like that. Then I got a data point right there at 71. I'm going to skip E because the market tends to move in nickels. And so then I got this high right here at 74. We've got the high at 78, so that's where the numbers come from. Hard data points, not mathematical projections. Value area highs, value area lows, pivot highs, pivot lows, modes, means. Market numbers then, Scott. every nickel on the E-mini. And you can do projections, Fibonacci, and the rest of it. Yes, I do. Volume is what moves the market. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy with that at 10:30 today. Scott, get your questions all lined up and we'll go through them in great detail, okay? Not ducking the issue right now. We have a lot to do.